Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series that we started in 2020 with leading investors, creators, and thinkers. And our goal on these talks is the same as our goal at our SALT conferences, which is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And we're very excited today to bring you the latest installment of our SALT Talks Crypto series with Joshua Frank, who is the co-founder and CEO of The Tie, which is a leading information services provider for digital assets. Their goal is to help crypto market participants act quickly and accurately on market-moving information faster with proprietary social sentiment and crypto SIG-Dev feeds, which is their trademarked flagship product. Josh began his career working on post-trade technology at financial technology conglomerate SS&C after graduating from McGill University in Montreal. I'm going to be hosting your talk today. Again, my name is John Darcy. In addition to being the managing director of SALT, I'm also a director of business development at Skybridge Capital, which is a global alternative investment firm managing about $8 billion today, including over $1 billion in crypto assets, which we're very excited to be what we feel like one of the early movers in the space, even though we weren't early on Bitcoin per se, but very excited to have a heavy involvement in the crypto digital asset world and working with people like Josh. Josh, welcome to the show.
Thanks for having me on. I appreciate it.
Where we sort of like to start all of our SALT Talks crypto episodes is to sort of talk people through where you had your, let's say, eureka moment on crypto. There's certain people that either came from the legacy finance world or came from technology and have arrived at crypto. You're a relatively young guy, so you're sort of crypto native in some ways, and you've got it more organically than some people do. But could you just talk us through when you got really enthusiastic about crypto, about blockchain, and decided to devote your career to the space?
Yeah, so my first exposure to digital assets was probably around 2012, pretty early, when my co-founder, my current co-founder, was doing short-term Bitcoin loans on Bitfinex, earning like 140% a year. And I was like, this makes no sense. What is this Bitcoin thing? Like, these yields are ridiculous. Something is happening. It doesn't make any sense, and ignored it for about 5 years and did nothing. So I'm not that early. And graduated college in 2017, took a job, you mentioned at SS&C Technologies, and was working in post-trade settlement tech, which is actually more boring than it sounds, if you believe it or not. And so I started.
It sounds exciting, but
really exciting. Sending email like customer support emails or email resets, like reset password emails. There we go. That's the word I was looking for. It was thrilling job, making about $40,000 US equivalent a year. It was just a great first job out of college. And so I was super bored at my day job and started day trading crypto. And at the same time was using sentiment data to build systematic models on equities, and kind of put two and two together and was like, if I can use sentiment data to predict the movement of a stock that has earnings and revenue and dividends in the digital asset space where there's nothing, quote unquote, fundamentally driving the value of these assets, one would inevitably think that sentiment was a leading indicator. And that's kind of how I got started. I was basically bored, making a ton of money trading crypto, and was like, I don't understand why these things are moving. Let me kind of try to make sense of it. And, quit my job and basically started this company, initially as a sole operating co-founder, trying to bring alternative data into digital assets. And that's very different than the business we have today, but that's kind of how I got started in the space.
Right. And you talked about how you're trying to fill a need that exists in the crypto world for more transparent, more trusted data. I think we're obviously still very early on that. Traditional markets, I think, have become fairly efficient in terms of things like spreads, in terms of things like information. I think there's still opportunities to generate alpha based on information flow, but it seems like there's much more opportunity for that in crypto. How would you rate sort of the efficiency and the maturation of crypto markets today versus what we see in traditional markets?
Yeah, we're so early. I mean, I think just for perspective on what we're doing in terms of how bad the problem is. So what we realized the biggest problem that anybody had, and sure, there's market data and things like that, which are certainly problems, but the biggest problem that anybody has is really the fact that no one has any idea what's going on in crypto. Like, you go and you talk to somebody and you're like, you're trading 20 assets how are you staying on top of all the news and information around those assets? In equity markets, it's a really simple question. It's I log on Bloomberg, I log on FactSet, or even I log on Yahoo Finance, and I can see news and corporate actions around equities. In crypto, this market is so disparate, like information is so disparate that, you talk to a hedge fund manager in crypto, you're saying, how are you trading, staying on top of your assets? They have 3 analysts spending their lives on Twitter. They're in 100,000 Discords, 200,000 Telegram channels, right? They're subscribed to all these newsletters, and that doesn't make any sense. And so our actually what our bread and butter has just become is tracking all this information in real time. And so just for some perspective here, I mean, we parse through every single SEC filing in real time, looking for mentions of crypto. And like, we picked up the Goldman Sachs DeFi ETF news 2 hours before anybody covered that news story. We picked up the Van Eck ETF news 20 minutes before anybody covered the news story. The only reason anybody covered the Van Eck ETF news is the 2 biggest crypto publications by reach actually use us to source all their breaking news. So we're always going to be before them naturally, but like, we track every court case, every regulatory ruling, every update from token, et cetera. But I mean, in some cases, we're finding things like we found announcements of exchange listings in Korea that are 6 hours before anybody in the US knows about them because they don't write about them in English. And so from that perspective, I mean, it's so early. From the blockchain data perspective, I mean, you go and you talk to traditional asset managers, they have no idea how to use this data yet, right? Market data is getting there, but broadly speaking, I mean, the information is not there. There's not a trusted, centralized, information flow. There's no earnings calls. There's no investor relations dashboards, right? That just doesn't exist. And so the only way to make sense of crypto is to bring information together from all these disparate sources. And we're getting there. And certainly that's my business, right? That's what we're trying to do, right. But it's still very early.
And how well are you able to tap in? You mentioned Discord, you mentioned things like Telegram. How well are you able to tap into those types of sources to glean information? Is that an automated process? Do you have analysts that go through and manually track those communities, or how does that work?
So our clients, have analysts that will manually go in and track. We're trying to build a SaaS business, right? That's scalable. And so all of what we do is automated. So we parse through some normal sources like your Twitters, your Discords, Reddits, things like that. But we're doing some really cool alternative data. We're actually, to my knowledge, the first data company in the world to do TikTok data. And that sounds obscene and that sounds like absolutely ridiculous, but it's crypto and these things are moving from TikTok. And actually the really cool thing is we actually work with the reason we started doing a lot of this weird alternative data is we were working with the tokens to help them build like ultra targeted influencer marketing campaigns using data, like understanding which influencers are driving social conversations, liquidity and different metrics. And we were like, a lot of this is being driven by TikTok. And now we're kind of reverse engineering that for institutions, which is pretty cool. And so it's all automated, right? It's building technology to go out to these thousands of disparate sources, scrape them and pull in information. But it's difficult because like with Discord, for example, what do you pull? Like everyone's like, oh, do you do Discord data? I'm like, we can, but what do you want to see from Discord? Because it's like a bunch of degenerates sending Pepes and memes to each other. Like, where is the alpha in there? Yeah. And the difficulty is trying to find signal amongst the vastness of crypto noise when Shiba Inu and Dogecoin are in the top 10, right? You kind of have a noise problem.
So you talked about how you work with token foundations to build communities and engage with communities and build effective sort of launch plans and long-term roadmaps. What are the elements that separate a successful launch or a successful meme coin or whatever it may be, and the ones that just essentially no one ever hears about that flounder and flop and basically go to zero? Shiba Inu is one that obviously rocketed higher. The Squid Game coin is one that went higher and then flopped. What are the things that make for a successful launch and a long-term successful shelf life?
Yeah, look, I think it's a very loaded and difficult question. There's a lot of things, right? There's a lot of factors. Obviously, community is the biggest one, I think. Crypto, there are no fundamentals, right? And so the fundamentals of crypto are community, right? The reason that Shiba and Doge and Squid or whatever Squid's not worth anything anymore. It was worth something like a week ago. But the reason that any of these things are quote unquote worth anything is because there's giant communities of people that support them. I mean, you take some of the largest projects, even like Cardano and XRP, they do not have a lot of support from institutions in crypto and from people that are kind of in the know, but on the retail side, they do, right? There's massive communities that support these projects. So I think community is obviously a big one of them. I think, institutional support is clearly one of them. I mean, you look at Solana, and that was clearly FTX and Sam and Jump and those guys that built out and brought attention to this ecosystem and started building on top of it. But there's also things which are less obvious, like token pricing. And like we found a tremendous amount of empirical evidence that basically all else equal, the lower your token price, the better you perform. And it kind of makes sense, right? Because retail investors, and this is why like all these meme coins that come out at like fractions of pennies. They're like, if this thing hits 1 penny and I put $100 into it, I'm a billionaire. Meanwhile, they don't understand the concept of market cap and the idea that, hey, you can't have an asset worth $47 quintillion, but maybe you can because it's crypto and these things are illiquid and maybe that will happen. I think that did happen with the Squid Game coin. I think it actually became like a quadrillion-dollar asset or something ridiculous like that, but I could be wrong.
Yep. And I'm just curious, you talked about sort of your entrance into crypto and you had friends that were involved with Bitcoin and trading crypto markets and things like that. Do you come at crypto from sort of a Bitcoin maxi perspective that Bitcoin is the ultimate sound money and that's the basis for everything? Or are you more of a blockchain technology as a massive breakthrough type of perspective?
Yeah, I wouldn't say I'm one way or the other very strongly. I believe in the Bitcoin store of value digital gold narrative, and Bitcoin is and has been my largest crypto holding. But I think that there's certainly application to a lot of the other things being built out there. There are a lot of interesting things that we're seeing, a tremendous amount of usage. I'm mostly interested on the DeFi side. And one thing that really interests me about DeFi, and not a lot of people talk about this, DeFi is only 5% of the overall crypto market capitalization. It's still such a small fraction of overall, maybe it's $500 or $600 billion. Maybe it's or 5 or 6, what is it? Or 50 to 60 billion dollars. That's the number. Sorry. Yeah. It's still a very, very small fraction of the overall crypto market cap, but it's growing. And so I wouldn't say I'm necessarily one way or the other. I think a lot of crypto is nonsense, transparently. I think a tremendous amount of the assets on the market, if not the vast majority, are nonsense. That said, I service traders, right? My clients are point and click traders. They're systematic traders. And the fact of the matter is there's a tremendous amount of interest in this market. There's a tremendous amount of volatility in this market. There's a tremendous amount of inefficiency in this market. And that leads to incredible trading opportunities, right? And so regardless of whether or not you believe in the long-term value of any of these assets, there's still a tremendous, reason to kind of get behind it. But I do, certainly see application behind Solana, behind Ethereum, behind a lot of these other, behind, your Avalanches, your Algorands of the world, behind a lot of the larger layer ones. But then I look at, projects that are 60 or 70 billion in market cap that have absolutely zero usage. And I'm like, this is nonsense. Then I see all these meme coins and then I see all these NFTs and I'm just like, what is going on? I mean, it's fake money at this point because these things aren't actually liquid. You can never actually sell that much of them.
Right. I mean, it seems like a lot of the NFT projects that really moon are ones where the community can sort of create scarce supply just by sort of teaming up and not listing their NFTs or whatever it may be. I mean, I think Ether Rocks is one example.
And it's also so easy to wash trade an NFT, right? It's easy to wash trade anything, but like an NFT, you make 2 wallet addresses or 5 wallet addresses, you sell it to yourself, sell it to yourself, sell it to yourself, sell it to yourself. And then, it went on a discount. It's 60% off. Meanwhile, you've wash traded it up 600% already, right? So, right. The challenge with NFTs is what's real and what's not. And I don't know, which is why I don't play that game. But that said, I think there's application. Just, we're going a little cuckoo here. If I'm, I try to take a pragmatic approach to the market.
It's going to be an interesting year for tax reporting for a lot of people in the NFT space when the IRS tries to figure out all the different movement of coins.
How do you mark to market your NFTs?
There's a whole bunch of questions that I think they're trying to figure out how to unpack, but I'll leave that to the accountants. In addition to providing real-time market data, you guys also provide what I think are really interesting research reports on things, deep dives into DeFi protocols, examining correlations in crypto markets. One of the interesting things and things that I get asked a lot from people who are less familiar with the crypto market is sort of the correlation in patterns we see with prices of things like Bitcoin versus altcoins and NFTs versus currencies. Are there any types of patterns and correlations that you guys have observed over time in terms of how the price of Bitcoin moves relative to altcoins and just the way the entire market sort of ebbs and flows?
Yeah. And so I would say this is more an observation versus a systematic approach, but I'll give you more systematic approaches in a second. The observation is when no one's talking about crypto, buy Bitcoin. when everyone's talking about Bitcoin, buy shitcoins. And when your grandma starts talking about shitcoins, run. And that's kind of just like, it's just been this pattern over time that's just worked, right? Where when the market's quiet, you'd rather be in Bitcoin. Bitcoin is a lot more stable. It doesn't move as much. It's not going to drop as much. It has some upside. But then when Bitcoin starts that move, right, where Bitcoin goes from, 50 to 65, right? Alts are kind of quiet. But once that move happens, because alts are much more liquid, they just see these absolutely massive runs. And the hard thing is to know when to get out, because the thing is, everyone's like, oh, the market is so frothy, it's so bubbly, whatever. But you can have a frothy market that 5X's again, right? And like we're seeing that with Solana, right? I mean, Solana was $2 at the beginning of this year. It's $250, $260 today, right? And it could double again. And people wouldn't really be surprised. And so that's more of I would say the observational side of it. From more of a system, more of a quantitative or mathematical perspective, I mean, certainly this market is incredibly correlated to one another. Certain subsectors are correlated. So a lot of times what we'll see is this market is very narrative driven, right? And we see that earlier this year, creator coins were a thing. So Chili's had a run up, and then Rally, which is another creator coin, had a run up, and then layer ones were a thing. And so, Polkadot ran, then Solana ran, then Avalanche ran, then Algorand ran. And so, an approach that a lot of people in this space have is just okay, this is a basket of 10 things. Which one of the 10 things haven't moved yet? Let me go into that thing. And that kind of just continues to happen over and over again. But what kind of leads to price movement? We've actually found some really interesting patterns and things that lead to price movement. I mean, one of the biggest things is when you just see a tremendous amount of announcements from tokens and listings on exchanges. We put out a research piece on that. Those actually tend to be a really good indicator of altcoins outperforming Bitcoin. And so I think it's really hard to pick what alt is going to win. I think it's a lot easier to build systematic models on should you be in alts versus Bitcoin for periods of time.
Right. Yeah, I remember, when Bitcoin had its recent jump in price after going through a period of softness post Elon's tweet, it seemed like a layup trade to me. I don't do a lot of day trading of crypto per se, but I think Solana was trading around 160 after it had previously gone above 200. And it just seemed like a layup to follow that pattern that you described, is when Bitcoin is getting all of the headlines, it's time to start creeping into some of the alts. And that played out both with Ethereum, which I guess you could consider an altcoin still, and then things like Solana as well. Let's talk a little bit about today. We're recording this on Monday, November 8th. Just transparently, this might air a couple days from now, but what type of signals are you seeing in sentiment today for something like Bitcoin? Bitcoin's trading at or near all-time highs as we record this. But what are these sentiment drivers that maybe forecasted this move, or what are you observing in markets today with Bitcoin? And then you can go into altcoins after that.
Yeah, I'm pulling this up just so I can take a look on our platform. We're seeing a tremendous amount of Twitter activity and other activity around Bitcoin, but even more so around altcoins. I'm looking, Solana today has it. I know we talked a lot about Solana, and so, I apologize, but Solana is seeing an 855% increase in Twitter activity today. Avalanche is seeing 860%. This is versus a 30-day moving average. And so we're seeing a tremendous amount of more people talking about these assets. We measure this metric called long-term sentiment, which just looks at how bullish or bearish investors are over the last 50 days versus the previous 200. And what we've seen with Bitcoin is that it stayed above 70, which means it's bullish. And the thing to note is that means Bitcoin actually has to become more bullish because it's rolling 50 versus the previous 200 days. So for it to continue to stay high, it has to continue to become more and more bullish. And we're seeing across the board is just bullishness. Bitcoin broke at all-time highs, or 66K today. And that probably is leading to a lot of the bullishness. But the interesting thing is the alts are being talked about a lot more than Bitcoin seemingly is. Solana actually has more conversations online today than Ethereum, which is pretty wild. And so
largely probably owing to the fact that Solana has its Breakpoint conference going on in Lisbon.
Yes.
But trying to just provide a balanced perspective on that. But we're obviously both fans of Solana.
Yeah, look, I think the market is bullish. And this is less quantitative as well, but from our perspective and your perspective is similar, being a fund of funds and, speaking to so many different hedge funds, I'm sure you have this. We have clients in this space, which are traditional hedge funds, which are publicly saying they're not in crypto. And I can tell you privately that they're not just in Bitcoin. They are trading really random altcoins. It's kind of funny, actually. Like, sometimes I'll talk to a hedge fund. I'm like, how did you find out about this thing? Like, they're like, we just took a big position in like Thorchain or this or that, which, look, Thorchain's a real project. Don't get me wrong, but it's like, how is that the project you stumbled on?
Right.
So it's pretty interesting. I mean, and the demand that we're seeing is through the roof. And like, look, you talk about like these big hedge funds, these $40-50 billion funds, maybe some of the ones that operate in pods, maybe it's 2 pods that are using it, or maybe it's a small team at these funds, but the sentiment among institutions is unbelievable. I mean, and I think somebody put out data on hiring at banks for crypto. And even though these guys may be publicly negative, it's like 100 new jobs hired, 80 new jobs hired, 70 new jobs hired for crypto. I mean, it's unbelievable.
Yeah, it's sort of every time Jamie Dimon comes out with his latest utterance on why he doesn't like Bitcoin or doesn't like crypto, I feel like somebody taps him on the shoulder and says, hey, Jamie, we have a 200-person team at JP Morgan working on blockchain crypto stuff. Maybe dampen your criticism slightly of crypto.
And the funny thing is that's negligible for JP Morgan.
Yeah, exactly. In the grand scheme of things, it's probably small, but they do have a meaningful group of people that are working on these things. And almost every bank does, because they see, Coinbase approaching the market cap of Goldman Sachs. And it's a wake up call for, these banks, even some of the more prestigious banks in the world, see that they have to devote time and energy to this.
Yeah, I think the one thing to note is those guys are probably going to struggle though. Because the thing to remember is people in crypto have made so much money. Like the traders, the people in this space for a while have made so much money. Like, why would you want to leave a job at a crypto hedge fund where you're getting carry and you're allowed to trade whatever garbage token you want, and you're allowed to trade NFTs, and you're allowed to yield farm, and like you have like this basically no limitations in your mandate to go join a traditional hedge fund and trade? Or like, why would you want to leave a crypto startup like to go to a big bank when like there's no rules and you have upside and options? And so, I mean, I think it's a great time to be in crypto. And look, I mean, we're certainly set up to service. Our clients are primarily traditional as opposed to crypto native. Like that's who we service. However, I think what we're seeing with our clients is they're having a really hard time recruiting talent away from crypto. And a lot of the promotions they're doing are internal, because people in crypto are having, the time of their life right now. I mean, there's no place more fun to be in than crypto, but just like, the party can end at some point. So,
yeah. And talking about institutional penetration, one thing Anthony Scaramucci, our founder, managing partner, talks about is that while there's all this talk about institutional penetration, it really isn't here yet. It's very shallow in terms of true, whether it be sovereign wealth funds, pensions, endowments, big banks buying crypto themselves. Maybe some of their clients are doing it either in their accounts or separately. But what have you guys observed about where we are in terms of institutional penetration and what it could do to crypto market cap if we do get incremental gains in that area?
I mean, it's here. It's small and it's starting, but it's here. What I say is, from talking to a lot of hedge funds, what a lot of them are doing is they're investing either out of their PA or they're investing out of the GP as opposed to the LP, right? So they're using partner capital and they're starting to trade crypto. They maybe are investing in growth equity rounds in companies or whatever else. They're starting to invest, with GP capital, build up a track record, and then raising a new fund from LPs. And a lot of them are going out to their traditional LP base and they're saying, hey guys, we've traded, equities or structured credit products or whatever else. You guys trust us. We know what we're doing. We've been doing this for 20 years. This is an awesome asset class, an awesome opportunity. Returns are outsized, right? Give us the opportunity to deploy your capital. And we're seeing that. I mean, one of the biggest private equity firms, it's not announced yet, just raised a $450 million fund. A $50 billion hedge fund just raised a $750 billion fund. I mean, the capital is now flowing in, it's coming in, but it's coming in slowly, right? These guys need to get their bearings, their grips. A lot of them started with CME Bitcoin, probably December of last year, November of last year. Now some of them are moving to spot. Now some of them are doing cash and carry trades, and they're getting there. It's taking time, but they're getting there. And I think once the funds that people are familiar with, that they're already invested in, start to build up that track record, start to prove themselves, build that knowledge base, make those hires, I think a lot of those same LPs, like if an endowment is an investor in whatever hedge fund, they'll start to say, all right, I'll give you $50 million for your new crypto fund. They may not, or maybe the endowment will buy a Bitcoin position, but for an allocation to alts, I think it's going to be through liquid token vehicles through more traditional hedge funds.
And in terms of what could, rain on the parade of crypto markets today or dampen sentiment long term, I think obviously regulatory issues are sort of top of mind for people. There's been noise from the SEC, Gary Gensler, about Bitcoin versus some of these other tokens that might be security offerings, and how do you regulate DeFi and things like that. What type of signals do you guys look for in terms of regulatory filings or words or phrases or things that are used by regulators? And how much of a threat do you think regulation is based on your reading of data to markets, and what's the time frame for that?
So the Dallas Federal Reserve Bank about a year ago put out some research on the regulatory impact of positive and negative regulation on Bitcoin. I can't remember what the average price impact was, but it was below 2% positive or negative in the direction of the news. So it wasn't crazy. Obviously, something like the People's Bank of China coming out and making a bold statement about Bitcoin has an impact, but it's generally temporary. What we're looking for is any regulatory ruling from like the FCA, which is the UK's version of the SEC, or the SEC, or major financial regulators, that is basically coming down on an individual token or individual company or court cases or things like that, or kind of broader regulation. Certainly, I think regulators can have an impact, though. If regulators like go after founders of DeFi projects, I'd be scared shitless if I was the founder of a DeFi project, right? And I'd be afraid to hold the token. I mean, look, it just depends what regulators do. I mean, if regulators come out and say Ethereum is a security, which I don't think they're going to do, there's no chance. But let's take a different asset, for example. Let's say XRP is a security, because that court case is obviously in session. Right. It's never going to be able to be listed on a U.S. exchange again, and that's going to hurt the asset, right? So I think regulators can certainly have an impact. I don't think it's long term though, because of the decentralized nature of crypto. Like for example, China came down on Bitcoin, and what happened? Hash rate on Bitcoin is back up. All the mining activity just came to the US. And, I talked to somebody in Mongolia building Bitcoin miners the other day, right? I mean, this is really in Africa. I mean, this is becoming a global industry. And so I think certainly regulators can have an impact, but it's not necessarily long-term.
Right. And you're starting to see even US cities sort of jockey for Bitcoin crypto supremacy. You have the incoming mayor of New York, Eric Adams, talking about wanting to make Bitcoin central to his economic plan in New York, and trying to incubate an increasing amount of crypto and blockchain activity in New York City. Obviously, Miami has sort of put its flag in the ground as wanting to be the crypto capital, not only of the United States and of the world. How much of an impact do you think that has on crypto markets? Public policy officials proactively trying to create these ecosystems?
I think in aggregate, it probably has an impact. Individually, not so much. The reason I say that is like the first time Elon Musk tweeted about Bitcoin had a big impact. Second time had a smaller impact. Third time, smaller, right? This industry is so narrative driven, and narratives just wear out so fast, and it moves so fast that like MicroStrategy, if MicroStrategy went out and bought $100 million of the Bitcoin, you probably wouldn't even hear about it. But the first time that happened, Bitcoin went up, like 10 or 20% or whatever the ridiculous number was. And so, look, I think in aggregate, it has an impact, right? I think if at a federal level in the US, something happened, that's a lot bigger than like, look, I love what Suarez is doing in Miami. I'm all for it. But like also, how is Eric Adams even getting Bitcoin? Like the New York has BitLicense regulation, and there's no way the New York City is set up to pay him in Bitcoin. That's kind of, whatever. But the point being is, look, in aggregate, maybe, but I don't think it's massive unless, maybe it's good if New York creates a ton of incentives and tax breaks and things that bring crypto companies here and incentivize innovation. That's probably good, but that's a 5-year play. That's not, tomorrow.
Yep. You talked about earlier about getting some of these regulatory filings sooner than everybody else, whether it's an ETF filing or something from overseas that you're translating and using your proprietary tech to find signals more quickly. What are the types of data? I mentioned, things like regulatory news, but what are the types of data that tend to move markets the most, whether it's keywords or, different types of announcements, but what type of signals do you think are the loudest?
So it depends on the asset, right? So with Bitcoin, it's a lot different than with altcoins. With Bitcoin, it is, regulation. It is a massive company buying. It is filings. It is maybe macro news. So, maybe interest rate changes or, economic crashes or anything like that, that tends to have an impact on Bitcoin. The smaller you get with altcoins, and we find that signals are usually best with mid-cap altcoins. And what I mean by that is the really small coins, it's really hard to build models to trade them because they're so illiquid that if one person decides to sell 100 grand worth, it could drop 20% and it doesn't matter what happens, right? And so with the really small coins, it's really hard to systematically trade. Those are like VC bets, right? It's hard to build models around that. With the larger coins, they're just so large at this point. I mean, Ethereum is 500 billion, 600 billion. It's a mega token, right? And so, something that would move Ethereum is like some major mainnet launch or something like that. I don't think it's if Ethereum partners with anybody, it's not going to move the price. But with the smaller altcoins, right? Partnerships, mainnet launches, things like that tend to have a really big impact. But again, it's the impact mutes over time. So the first time something gets announced, it's a big impact. Then over time, it gets smaller and smaller and smaller, right? So when a layer one says, hey, we have smart contracts, boom, that's huge. When they say we have our first DeFi project, that's huge. When the 75th project lists on that blockchain, it's not necessarily going to have as big of an impact, right? And so a lot of times it's the first or second announcement for these projects that tend to have a big impact.
Are you accounting for things like that? Are you accounting for diminishing returns of those types of announcements in your signals for different coins, or it's just you're providing those data points and letting your clients glean the insights from those?
Yeah. So systematically, our clients would have to figure it out. The majority of our clients are actually discretionary. We have a terminal that looks something like a FactSet Bloomberg for crypto that brings together market data, news, sentiment data, on-chain data, derivatives data, everything in an all-in-one interface. And so there you can actually see if the news is repetitive or not, if this type of announcement has happened in the past, or if it's kind of a first announcement. And the other thing I'd say with altcoins, and that impact is becoming smaller today, but is exchange listings, right? If you're a smaller token and then you get listed on Coinbase, on average in 2020, there was a 50.4% increase in the price of an asset between the time Coinbase announced the listing and the end of the day when that asset was listed. So generally they announced it a couple of days before. A 50.4% average price impact. I mean, just think about that in context of equity markets. People are excited to make 6% a year, and a listing results in a 50% increase on average. And that's decreasing over time. And certainly you can't necessarily trade that at so much scale because there's so much capital rushing in. A lot of times it's like a big pump and then a dump too. But things like that are generally great opportunities. And I would also say that crypto tends to be buy the rumor, sell the news very heavily in this market.
Yep. Where you have alluded to this throughout the conversation, but where is the majority and how is it broken down in terms of the people that are interested in your platform and your tools? So is it retail? Is it prop trading firms? Is it hedge funds? Is it, higher on the institutional totem pole, sovereigns and endowments and pensions? But what does your client makeup look like? And what does that tell us about the crypto ecosystem?
Primarily hedge funds. We don't service retail. So we license data into different players that may provide a little bit of data into retail investors, but we don't do that directly ourselves. We have a data terminal built for institutions. And so the clients range from hedge funds. We do best with discretionary point and click traders. So people that are trading off of things like news, changes in blockchain activity, sentiment, anything like that. We sell into systematic funds as well. I would say the vast majority of our clients tend to be larger in size. The average client is probably at this point over $1 billion in AUM. So they tend to be larger, tends to be trading desks. We sell into tier one banks, now actually selling into regulators as well that want to stay on top of this market and understand why is this market moving, because that helps shape policy and regulation. So it's a range, but the vast majority of our clients are hedge funds, and it's, we're starting to, I would say, sign more traditional hedge funds than crypto hedge funds at this point.
In terms of markets that you guys analyze and where things are moving, the metaverse has been something that everybody's talking about, and it's hard to know exactly what that means in every different context, but things like NFTs, things like digital worlds, whether it be Decentraland or others. How are you guys looking at how to read signals within the metaverse on things like NFTs, on things like digital real estate and things of that nature? Is that somewhere where you guys are looking to wade into, or are you more focused on the currency side?
So starting to dip our toes in it, but that's more for the crypto native funds than the traditional funds. Traditional funds are generally easier to work with because they don't get as bored as fast. The crypto guys are used to things tripling every 5 minutes. And so if they're not into the next thing tomorrow, they're bored already. And so we actually rolled out this thing. We call it the NFT black hole. So there's this thing called the Ethereum black hole, which is a smart contract address where all new NFT mints and smart contracts originate. And what we're doing is showing our clients in the last 5 minutes, 10 minutes, 15 minutes, what NFTs are being minted the most and by how many holders. And things like floor price and other metrics around those NFTs. And that's more like, oh, I want to go throw all my money into this thing really quickly for a 3-day trade or whatever. We also show metrics on like what are the hottest selling NFTs and things like that. But it's really hard because like, as I mentioned before on like wash trading, it's like, what is the floor price? What are these things actually? But it's the same thing with art, right? Like art is only worth what somebody's willing to pay for it, right? There's not like a Bloomberg for art, really. There's not, people aren't like, it's hard. Like things like baseball cards are easier just because there's, you can go on eBay and you can see pricing history and stuff like that. And that's like kind of what we're trying to do with NFTs. But I would say we're still early. The vast majority of what we're doing is just delivering information in real time to help somebody make a better decision. And a lot of times what people are using us for isn't even to find alpha. It's literally just to stay on top of the disparate market, right? So like just even knowing what the NFT activity is on Solana versus Ethereum is useful information.
Well, it's a fascinating world, and you're doing a great job of helping people to break down what I think is a very opaque marketplace that has a lot of nefarious players. In addition to a lot of great things and exciting things that are happening in the space, it's important that we figure out ways to sort through the noise, and you guys are doing a great job of that. Joshua Frank, again, your firm is thetie.io. If you want to learn more about their crypto SigDev feeds and some of the other products that Josh was talking about, it was a pleasure having you at Salt and enjoyed having you on Salt Talks.
Yeah, thanks for having me. I really appreciate it.
And thank you, everybody, for tuning into today's Salt Talk with Joshua Frank from The Tie. Just a reminder, if you missed any part of this talk or any of our previous Salt Talks, you can access them on our website. It's salt.org/talks, or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active at Salt Conference. We're also on LinkedIn, Instagram, and Facebook as well. And please spread the word about these Salt Talks. Again, I think if you're involved in these markets and you're not tapping into some of the sentiment data that people like The Tie are producing and the research that's coming from that sentiment data, you're doing yourself a disservice because, as Josh mentioned, there's no real fundamentals in crypto per se, or a lot of assets, frankly. It's all about community and it's all about sentiment. And that's what's driving crypto. And I think The Tie is doing a great job of breaking all that down. But on behalf of the entire Salt team, this is John Darcy signing off from Salt Talks for today. We hope to see you back here again soon.